the Payment of Bonus Act. So this Payment of Bonus Act was enacted in the year 1965, and this act is nothing but it is giving some dividend, like in case of an employee. As we know, there should be a relationship called as employee-employer relationship in case of payment of a salary. Same way, a profit distribution or like some gift like is being given to the employee in recognition of his service done in the particular organization or the factory. So this Payment of Bonus Act is given on some occasions. In India, Payment of Bonus Act mostly bonus is given during the festive season, that is Diwali. So this act has references with respect to main theme is in order to have give a statutory liability. So this particular act tries to have some emphasis on the employer to give some benefit, or it can be called as a gift on some occasion. So some special occasion, something is to be given other than the salary to be given to the employee. So the particular thing is it is covered. So any institution, any organization or any factory, industrial establishment or undertaking which is covered under this Payment of Bonus Act has compulsory to give some bonus during this festive. So the main thing is they have some formula. So we will look into that, how to calculate that in the next slides. So this particular act has come into existence, and as I told you, it has been originated in India during the First World War when and it was mostly introduced in the textile industries. So during that war time, people were given extra 10% as a war bonus. Even we have seen lot of cases where there is an industrial dispute. So any industrial dispute can be mooted when the particular bonus is not paid to the employment. In that case also there is a demand for payment of bonus. And in 1950 there was a full bench on labor appellate tribunal which has given us the formula how to determine this bonus, and that particular formula only we follow on 65 Act. And this act is applicable throughout the India, and here we are referring factory as a factories. So any industrial undertaking where we have already seen the definition of factory under section 2 subsection M. So here factories and any establishment where 20 or more persons are being done on any accounting year establishments. So when they are doing any activity, then that we call as a factory. And here when you talk about in which when you have 20 or more persons are employed on any day during the accounting year, and in case of public sector they have given it as government 40%. So for the establishments, that is Payment of Bonus Act will apply even if the number of employees are below 20 under two conditions. So one is when the particular industry is being having a minimum employees of 10 only, then if also they are covered under Bonus Act. If they are covered, then they have to pay. And if any industry is being notified under the official gazette, then they have to pay the payments. The main objective, as I told you, is to impose some statutory obligation on the employer, so or any establishments which is covered under the act, and whoever employee's name is there in the muster roll or payroll in the accounting year, then if they have completed 1 year of service, then he is eligible for a bonus. And the outline is the payment of bonus. As I told you, we have some formula, and this particular payment of bonus is being linked with the minimum and maximum bonus. So based on the minimum and maximum bonus, we have some linking with the bonus, that is the set off and set on, and it is a machinery which is enforcing the liability of payment of bonus. Now we will see what is this minimum bonus. So we have to first look into what is called as an establishment. So any establishment means a factory which is having some departments, undertakings and thing. And what are the categories to whom the particular certain employees who are coming under certain categories of employees. So under section 32, so this is not applicable to persons, that is employees who are employed by the LIC, then Merchant Shipping Agency, that is 1958 Act, or people who are employees who are registered under Dock Workers Regulation and Employment Act, or employees of the Red Cross Society or institutions like its branches or university or other institutions, they are not eligible. Then the IFC, that is Industrial Finance Corporation, then DIC, Deposit Insurance Corporation, then NABARD, UTI, all these financial corporations, also they are being called as a not applicable, applied to certain categories. So they are under that particular category, or these would be small industrial development of India. And we have to talk about the minimum bonus. So we have to talk about the concepts also, what is called as allocable surplus, available surplus, all these definitions we have to see about the under this particular act. So minimum bonus is fixed as 8.3% where there is no allocable surplus. So in case of a new establishment is possible, and allocable surplus is mentioned under section 2 subsection 4, stating that how that is other than banking company, when they have not made any arrangements under the Income Tax Act 1961, then they have to declare the payment within India based on the dividends out of its profits. So if they have received any profits, then they have to pay, and 67% of the available surplus in the accounting year. So other than the other cases, then it is 60%. So this is with respect to payment of minimum bonus. Then objective, as we know the objective, we have to have some redressal mechanism, and it is to provide set off and set on mechanism. Then they have to prescribe what is the minimum bonus. As for now it is 8.3% and 20% as the maximum percentage of bonus. Then they have to calculate, the formula has also been given, and it is covering all the factories which are already defined under Factories Act 1948. And even if minimum number of members employees falls below 20, if their average is only 10, then they get a minimum is that is maximum is 10, then they can take it, but provided the particular factory should be covered under the act. Then the monthly ceiling is rupees 3,000 per month, and this is based on the qualifications. And as I told you, the class of employees on whom the particular act does not cover is LACs, seamen defined under Merchant Shipping Act, then RBI employees, inland water transport establishment, then social welfare institutions, then like NABARD, all those things. The salient feature of this act is it, as I told you, it is applicable to all factories or establishments when 20 or more persons are being employed. So it is including the departments or undertakings or branches also, and the eligibility is they are having a salary of rupees 300 per month, and it also applies to skilled, unskilled clerks and supervisors. So the criteria how the bonus is fixed is based on the wages they earn plus the dearness allowance. So 30 days minimum work should be there, and as I told you, maximum is 20% and minimum is 8.3 salary. So the bonus payable is, the limit is if it exceeds rupees 7,000 per month, the bonus will be calculated assuming salary as 7,000, and in case if it is exceeding 7,000, the bonus will be calculated based on the entire salary that is to be taken into consideration. So this is how we try to calculate how the salary is to be paid. So when you talk about salary, it does not include all the other allowances. So what all the allowance is receiving, that is not eligible, and even the house or accommodation, or in case of supply of light, water, or medical attendance or some other amenity, even that is not there if they are getting it in concessional. So even supply of food grains, that is not applicable, or any traveling concession, that will not be part of salary. So that is what we have to refer to it in case of calculating the bonus. So if he is working not less than 30 working days in that particular year, then he is eligible. That is what how they calculate the amount of bonus in case of employees. This is how they calculate. And as I told you, we will talk about what is called as available surplus. So in case of computation, so we have to first take the depreciation. So whatever the amount of depreciation which is admissible under section 32 of the Income Tax Act 1961, that should be deducted. then any amount paid as development allowances and direct taxes which are payable or during that year, that should be taken deducted. Then any other sums which is specified in schedule 3. Schedule 3 here refers to the computation of profits of a company, that is schedule 3. So here we refer to the banking company. So what are the items we have to take into consideration? Then direct taxes in respect of such gross profits which is already been reduced by amount of bonus for the immediately preceding account year. We have to add direct taxes in the particular year for the immediately preceding account. This is how we calculate, and how this is the formula for calculation. So allocable surplus is equal to, as I told you, 60% of available surplus. So in case of foreign companies, it is 67%. In case of calculations, we have to make some adjustments for set on and set off. So for calculating the bonus in respect of the particular year, we have to first compute the allocable surplus, and after that only we have to calculate what is the amount of set on and set off from the previous year. So this is already been instructed through the fourth. So we will first see one by each one thing. So first we will talk about what is allocable surplus. So in case of employer, as I told you, being a company other than banking company. So if an employer is there and it is other than the banking company, then we have to, as I told you, there is now arrangement already been prescribed under the Income Tax Act 1961. Then we have to give a declaration. So what are the amount of profit which we have earned in India, and that should be only dividends payable out of its profits with respect to provisions of the particular act, that is 1961 Income Tax Act. We have to take 67% of the available surplus here. In some other, as I told you, in other than that case, 60% will be taken in, that is with respect to, that is to subsection 4. The formula is, we have to take the direct taxable. What are the amount direct taxable paid? That is already mentioned in the schedule 3. Then direct taxes as in respect of gross profit immediately preceding the accounting year. So immediately means previous year, preceding the accounting year. We have to take allocable surplus, that is 60% available surplus. And in case of foreign company, as I told you, we have to take 67%. But before calculating, we have to find out what is the amount on set on and set off. Based on that only, the set on and set off will be carried forward. What is the principle is that in any year, if we don't have any amount, then this is the utility, how it can be done. Suppose in any accounting year, we have any amount which has been carried forward and set on, or they have come under section 15, then if you are calculating the bonus for the succeeding next year, that is accounting year, we will take the amount of set on and set off carry forward from the earliest accounting year. That should be firstly taken. So year 1, that will be utilized first, then year 2 will be utilized second, like that we have to follow the order. This is how we have to calculate for set off. So as I told you, we have to think about how the bonus is payable. In case if the basic salary and earnest allowance is less than 21,000, then bonus is payable. If it is more than 21,000, it's not payable. So this is the qualification for bonus eligibility and disqualification. So when we are trying to compute the gross profits, so we will talk about it. And regarding bonus, as I told you, if in the eligible year he has worked not less than 30 days, then he is eligible for bonus. A person who is not eligible for bonuses, if an employee is disqualified because he has done something very violent behavior or inside the premises, or he has indulged himself in any fraudulent activity, or he has conducted any misappropriation or sabotage of property of the establishment, or he has indulged in any robbery or theft activity, then he is not eligible for bonus. So this is application. So this particular act is giving us a statutory right to share in the profits of the employer, as we know. So before this act, they were not just they were pleasing it, but now they have a confirmation and so how they are giving it. And as I told you, the minimum limit is 8.33% and maximum is 20%. So we have to always round it off to 100. So regarding the major, it is minimum is 100 and maximum is already specified based on 20%. So we have to calculate so maximum bonus, and for minors it is 60, and for maximum bonus payable is 24,000. This is how they calculate, and this is for a set on and set off. And allocable surplus means if it is exceeding maximum bonus, then the excess, as I told you, shall be subject to the 20% will be carried forward for next 4 accounting years. So set off means, as I told you, in this year if you don't have surplus or the amount what we have is less or equal to the minimum bonus, in that case we can take the minimum or the deficiencies carried forward for the next 4 accounting years. So this set on and set off should be adjusted when we are calculating the bonus in the particular year. And regarding the maximum bonus, based on the set on and set off only we can calculate. Suppose we are calculating the gross profit, and when you are taking the account the amount set on or the amount which is called a set off, which is exceeding the minimum bonus, then the employer will be paying bonus based on the proportion, as I told you, salary or wages. That is, here salary means salary or plus dearness allowance if it is entering the retirement benefit, that is being earned by the employee in the particular account year. So the maximum is 20% of his wages. So how the priority is being given on set on and set off is, if we have credit balance in bonus fund, that is called as set on. So we have more in bonus fund, that is set on. And when we don't have, there is a deficiency in bonus fund, we call it as debit balance in bonus fund, we call it a set off. So based on the accounting year, whatever the amount is carried forward and set on or set off based on the credit balance or debit balance, then we have to calculate the bonus for the succeeding accounting year. So the amount what we go for set on and set off will be carried forward from the accounting year shall first. So as I told you, first year we have to take on, second year will be taken next. So based on the first